Good afternoon and welcome to the end of day review. Not end of day, we mixed both. It's end of week review for this week. So this week we finish up a week 10, week number 10 in quarter one. And next week we will week 11 right there. So we just finished up week 10 right here, which is we have the non-farm payroll data released on the Friday. The first Friday of the month is the non-farm payroll. And next week we're gonna have a CBI data released on March 12th right there, March 12th. So March 12th is a Wednesday, it's a midweek right there. So very excited to see how the inflation number gonna impact the movement or the volatilities of the market right there. But this week and the weeks before, we have a beautiful setup. If we look on the high time frame level, we can see how beautiful it is. All right, let's look at the high level. In this case is the daily time frame right here on our left, and then we have the weekly. So let's start with the weekly candle on our right. So let's draw some key levels. So you see that this the week that the election in the US right there, November 4 right there, the start of the week right there. And this week is a perfect for candle run theory right there. So let's mark the high of the candle, and you can see that how the price move around this level is amazing. All right, because this is a weekly, so we have a different color code right here. I think we do this daily, right? This is our daily, and then it's our weekly right there. Yeah. All right, so that's our weekly level. So let's mark the high and the low of this candle, so we can have probably idea that why the market doing what it's doing. So look at the weekly and the daily give us a lot of information, or for the better words is that it helps us. So basically in the weekly level give us a better clarities. Yeah, give us better clarities in terms of the price action, because it combines both time base and the price. Remember, the markets of price action influenced by both critical, both times and the price. Sometimes we so caught up with the price, but we forgot about the time sensitive. But now if we are stay back and push in the time factor in our decision making when we play a trade, then we can see a better picture. Then the way we look at the price action or liquidity, it completely transformed. So let's make it more accurate. So the high of this is 60, 40, 50. So 60, 40, 50. Let's fix up this number and make it precisely. So right there. So that's the high of this candle. And what's the low of this candle? The low of this candle, 57, 24, 25. 24, 25. 24, 25. Okay, so when we mark the level, we see how it's reflect in the daily time frame. You see that? Very critical right there. That's our daily time frame. Yup. Beautiful right here. All right, so we see right there the level of at 60, 40 right there. You see it's break that level, and as soon as it break, it reverse. It tests from below a couple of times, it break, and it tests from above. It tried to break it, but it reversed, and it's reversed again, and then now it's break down again. And you see that the last 2 weeks is sell off. It's very interesting how we see this candle formation and this candle formation. You see different right there. So this candle, the week before that, you have the open on Monday, right? You see the open on Monday, open on Monday. So the open is between the Friday before that, and then boom, it go down and break that low right there. You see that? So the Monday is break the key level, and you see that the Tuesday and the Wednesday is consolidation or non-expansion move right there, and then boom, on Thursday we have a expansion to the downside, which basically is a leg down. First leg down, consolidation right here, and then boom, the next leg down. And look how the week it formed. It formed by the reversal on Friday. See that? But this week is the huge expansion down, and you see that this Friday and this Friday different. So this Friday, the last Friday, is this reverse expansion, but for this Friday, it's almost expansion, but then it retraces. So very interesting to see how it's play out at this level and this level next week. So far, if we mark this level, we're gonna see that it tests from above twice. Boom, boom. So I'll anticipate that it may not come back to level on Monday. It may not, it may reverse from here. But it's not a, because it looked like it does not have enough sell liquidity, so it needs to retracement to make what? To build up more sell liquidity. Because we don't think this is a very reliable reversal. You only see reversal very reliable when you see the reversal right here. You see that? Breaks, test from below and reverse. That's a type 1 reversal. We saw this phenomenon on last October. Let's mark the level right here. That's the level that maybe right here. You can see that, yeah, this level. You see that is marked this yes, so you see that level right there. You see that is break, test from below 1, 2, and reverse. That is a very reliable reversal, which is type 1 reversal. So to go back to the model that we have, so we have type 1 reversal on the left and type 2 reversal on the right. From our observation and from our data that we collect, the reversal type 1 happen a lot. It's more often and it's more reliable than the type 2. So basically the idea is that you marked out one of the key level. So it's key level right there. You can see that it's break, it tests from below and it reverse. The test from below can be just one time, or it can be more than one time, 2 times, 3 times. More of the time we saw is 3 times. It's not going to do more than that. So in this case, you see that it's test from 2 times and then boom, it reversed. So we don't see it's here yet. We don't see it's here. Maybe what's the level we're going to see? Let enlarge right here a little bit. Maybe we see yeah, you see that you mark with level, you still don't see that this one tests from below. Yes, it did not touch yet. But at this level, we can see that it tests twice already. But if we mark this level, it is, yeah, you can see that. Let's mark this level. You see that this level happened last week. You see that this level right there, it tests from above 1, 2. This guy gonna break it. If it not break, then it can it gonna reverse. But you see very interesting right here. You see that last Wednesday, last Tuesday right here, it tests from below 1 and Wednesday tests from below 2. But remember, the Wednesday it did not take the sell side. That means that that's not enough sell side. That's the reason why it had to retrace to build up sell side and then boom, it's flush. But right here, the same phenomenon happened. You see that on Wednesday, mark this level. Right? It did not take the sell side liquidity on Tuesday. The Wednesday did not. But interesting that here the Wednesday it completely the inside bar for the Tuesday. The last Wednesday, at least it take the buy side. It give a very strong signal. But for this Tuesday, it completely the inside bar is basically overlap. It not overlap, but it completely in the range within the range of the Tuesday. Is also the indicator it gonna go down and take. It gonna make the low of the week right there. You see that model wick take out the Tuesday low right there. So let's see. So it may come back. Let's see. Very interesting. We're gonna see how next week it's gonna play out at the level. This candle right there. So far, you see it test from above 1, 2, break, and let's see if it reverse or not. Test, break, and reverse or not. So it is one of the key level we're gonna find out. So the low is right here, 58.09 right there. See that 58.09, that's the level. And we also want to see the level right here, the low of the Tuesday. So basically the Wednesday, I heard they tried to break the level, but it fell. And Friday tried again, it fell. So it tried twice. So it may reverse from here. Even though we see that the reverse at this level is not so critical, but you see that it really ripped the sell side liquidity right here. 1, 2. So you see that it may. We saw this phenomenon before. So basically, after two tries, if it fell break level, it's gonna reverse from there. So that's one of two key levels that we need to pay attention for next week. So the range right here is very important. So from 5809 or 5809, and then this level 5744, and also the weekly level of the 5724 right there. So we go back to the weekly. You can see that this candle rank theory is the high is already touched level, and now it gonna check the low of this level. So we will leave that it's gonna be stay in this range, but if it broke down this range, then it need to fill out this gap. You see that on the weekly, we see the gap right there. So it may come down and fill the gap. Very interesting right here. Yes, so we can see on a weekly we have the gap right here when it's young. So let's see what the high of it level is. 5641 50 41 50. So let's fix this up. Yes, so let's see. It did go down here. Is the gap right there. It did go to the error right here. Let's see if it's gonna fill this gap completely, or it's gonna rebound from here. So very interesting to see. So that's it, our take right there. So we want to do this exercise right here. Basically, we want to see this candle is the weekly right there. How the formation right here. You see that the formation of the weekly candle. Well, you see that? That is the weekly candle. Let's remove this. Alright, we're gonna take very interesting to see. You see that's the weekly candle formation right there. Let's mark right here and then right here so we can see. Alright, let's mark on the daily. Alright, and this is the Monday. Alright, so what the low of this one? The low of this one is 59.48. So 59.48, and the daily candle we have a green color code. And what's the low of the Monday, last Monday? 94, 59, 94, 50. 59, 94, 50. And we choose the color code right there. Alright, so that's the picture we want to take right there. So basically we have Monday, Tuesday, and okay, so let's go with this. That's the Monday. Right, that's the Monday. And then you have a all right, so that's the Monday, okay? That's the Monday. And then you have a Tuesday right here. Okay, and then you have a Thursday and Wednesday, and then this is Thursday and Friday right there. this one is Thursday. And then that is the Friday. This one on the bottom. Alright, let's take 3 screenshots there. So you have Monday, Tuesday, and then you have, and it's Friday. That's how the candle formation right there. Then you look into, all right, so here's the candle formation for the week. That's the weekly candle. Then how it manifests itself in a daily. So how the higher time frame manifests itself in the low time frame, which is daily frame. You can see that. So the level 40 right there. So Monday is open exact level. Is that open exactly? Let's find out. Look into a daily chart right here. So the Monday right here, the open 60, 40, 75. Okay, so it opened just one tick, 1 point or 1/4 above that. It says 75, 850, and it just opened just above that weekly level right there. And then boom, it break it down. It break the low of this candle. Yes, so when just above that, you can see that on the weekly right there. 40, yeah, 75 right there. And you can see that after that is expansion. And then on Tuesday, we thought they got a huge expansion now, but somehow it pulled back. So basically it's a consolidation move. And on Wednesday, it do the same. All right, it do the same. But on Wednesday, it check out the low, because it's the high of the Tuesday. And then we thought, at first we look at that, we thought, all right, maybe the level right here, 94, 59.94, we see, okay, breaks, test from below, then reverse, because this is a type 1 reversal, right? Breaks, test from below, reverse. However, look right here, the break is not, it still have a loss of week. It still have a long week right there. That means this break does not have enough sell-side liquidity. That's the reason why it have to be consolidation in order to make the non-leg down. You see that there are lots of retracement here. Basically, it doesn't have. So basically, this candle tells us that it does not have the sell-side liquidity in order to close below this level. It did not have it. So the algo have to go up to build up the sell-side liquidity. The same on Wednesday, in order to be flush real hard and heavy on Thursday. And then boom, Friday you have reversal. That's where the week come from the weekly candle right there. So beautiful. So this is a week. I think actually week 9, not week 10. This is week 9 right there. Yes, that's the week 9 right there. But for this week, we see something that similar, which is a expansion, but there's no reversal on Friday. Friday is just a retracement, because we not remember that we have two scenarios: expansion then you have a follow-up through another expansion. It gives us, or you have a reversal, or you have a retracement. Keep in mind, retracement can go back, can turn into a reversal. So let's see. All right, here's what we come up with the week 10, which is this week's candle formation. That's how it is. So behind the scene, how this candle formulated. So you start right here is the Monday, and then you have right there is the Monday. See that? And the Monday did touch the level 94, and then you have a breakdown at the level 48. 48 right there. This is a so okay, so 59.48 and 58.48. 58.48 is the weekly level right there. So that's how this week formation. And look, compare with last week 9, right? It's a week 9. Here's the week 9 we have. You see, that's how a formation right there. This candle does not have liquidity sell side. That's the reason why you see that the Friday reversal back right away. So you have Thursday breakdown and then Friday reversal. But for this week, the Friday not reversal back right away. So the Friday it become a retracement, it not reversal. But here's how it's formation. Very interesting. Now we need to drill down to the Thursday, because very interesting. We're going to see how the Thursday formation right here, because it let it know whether both week 10 and week 9, which is this week and prior week, they both had the same idea, same pattern, which Thursday is the day the expansion make the neck leg down. So we want to see how it different in the 50-minute time frame between this Thursday and last Thursday. So here's how we see how we got from the weekly. We can see that how its formation manifest itself on the daily. You see the daily right there. By Monday, the first leg down, and then you have Tuesday and Wednesday is consolidation, not enough sell side liquidity, so it stay above the level, the 58.2175 right there. So basically you have test from above twice. The question for us is it gonna be break this level or not? We look into we look on Thursday, it did break in that level, the level 21.75 right there. So it broke a level in the London section, and when it go open around 9:30, you see that it's already giant move right there, 89 point move right there. It makes sense that it gonna retrace to build up more sell side liquidity before it can flush down, make this neck leg down in the PM section if for black butter right there. But basically it makes leg down, and it start at what? It start at 11:30. If you watch in the real time, you can see that right here is flip. Actually, it go up and then boom, it flip down. But if we look on the daily and we know the pattern, we know for sure that if it flip right here, then go ahead and short them because it's gonna come down and rate at least the low of Tuesday right there. Yes, that's the low of the Tuesday. Yes, so that's exactly it happened. Take the low of Tuesday right there. Or go back, yes, the low right there. Or the low of the 9:30. So that's the candle formation. From the weekly level, we can see how it manifests itself in the daily, and then in the 15 minutes. So that's for this week. We're gonna do the same exercise for last week so we can see the pattern or anything that we can learn. Alright, we noticed that on this Thursday by 9:30 we see it's huge drop right there. It's 90-point drop right there, 89-point drop right there. That's the first thing we observe. And then we can see that from 9:30 to 11:30 is 2 hours for the algo to build up, shell cycle to build up right there. And then boom, it's gonna make a second leg down, and it fit into the pattern expansion. This is just a retracement, then boom, expansion. So it never break the level 21. So that tells us it's just a retracement, boom, ready for next leg down. Alright, here's what we got for the week 9, which is the previous week. So basically we have pretty much the same setup for this week. You have the Monday is down close, and then wow, on Tuesday you see that is retracement or consolidation. And then Wednesday you see the similar situation, and you see that the Wednesday is almost a inside bar right there. So it's ready to make a second leg down, which is on the Thursday. It will expansion and break the level 49 and 59.48. So when we go into Thursday, we're gonna pay attention to that level to see if it can reverse from this level, 94 right there. So you have break, test from below, see if reverse right there. So that's the weekly candle we form. It opened just below the high time frame weekly. And here's how it looks like in the daily. We have a daily right there, but we have another version right there. So you can see that it's breakdown. We mark this level at, that's our target for this level, this candle. That is a little bit hard to see, but the level right there for this candle right is 59.25. I think we have it right, 59.25. Let's take a look, 59.25. No, actually right there is 59.06, the target level for the Thursday. Yes, so 59.06 right there. And that's how it go all the way down, 59.06 right there. That's right, 59.06. So we can see a couple of observations right there. So the open at 1800 is below the level that is supposed to reverse. And right here we see that at so right here you have 9:30, right here is 9:15, and then you have 9 o'clock. So 8:45 you also see huge broke down that level that is supposed to reverse. On 1 hour time frame, on daily time frame. Yeah, break, test from below and reverse, but it did not. It fell. it broke down that level. And then on at the 9:30, you see that it opened just above the level, and then it got flip, and then it come now, it broke the level, break the level. And look at phenomenal right here at 9 o'clock. You see expansion, and then you see the inside bar right there, which tell us that it's gonna be neck leg down. And then the hue moved out, but at 10 o'clock right here, it does not have liquidity, sell side liquidity. So from 10 o'clock into 1:30 p.m. right here, it take a retracement, 2 leg retracement right there, 2 leg retracement, 1 leg, 2 leg, then boom, it make a next expansion right there. So it takes 2.5 hours to build the sell side liquidity, and then it break the key level 59.48. 59.48. 59.48, which is this level right here, 59.48. Is that right? 59.48. Yeah, 59.48 right there. 59.48. That's the level that it broke. 59.48. 59.48. Yes, so it takes 2 hours to build up liquidity, and it's broke down a lot of liquidity right there. And then from there it go all the way to the target at 59.06. 59.06 right here. So very interesting. We see that the 2 week, how the 2 weeks manifest itself. So this the week before, you have this weekly candle and how it manifests itself on the daily, another daily, another pushback, and then on the 15 minutes is how it manifests. Let's put side by side, we can see that how it manifests. We just take a sample of the Thursday, which is the key movement right there. So this is for this week. That's how information right there. But on the Thursday, you see that the open is above the level, but it's open below the key level right here. It open below 48, 50, 49, 58, and it tried to go above that just a little bit. But on the 9:30, it's way down at that key level. That's why it needs retracement. And for this, the previous week, week 9, the key level right here. Yeah, the level, this level is hard to see, but it also open below that, and then it go above a little bit. This one is open below that, and it go above. They both open below and then go above that level, and then it accumulate sell side in order to make a neck leg down right there. All right, I think we need to wrap up. Run out of time. We thank you for your time and interest. We always grateful for the opportunity. Day by day, little by little, we're getting better and better. We're doing what we love, and success coming our way for sure. Thank you, and have a great week ahead of you. See you. Bye for now.